Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, 14th day of August, 2017, and this is the Daily Report for gold and silver. Moderate selling in gold today, taking it off about $6.50, trading to $12.8750. That is our current print. Low today, $12.8420 with a high of $12.96. Silver unaffected today, in essence unchanged, trading at $17.07. Let's take a look at our first chart. So traders, absolutely no doubt, we do have moderate selling pressure in gold, with silver in essence unchanged, platinum trading lower on the day, and palladium actually trading a little bit higher. So in terms of the precious metals complex, we do have a mixed bag, but that's certainly not the case in gold. Gold currently is down about $6.30, about a 0.5% decline, currently at $12.8770, and that is basis most active December's futures. We can see that as illustrated by this large red candle, and we can also identify quite easily an engulfing bearish pattern in terms of candlesticks. Now, for an engulfing bearish to actually make sense, you would need to have a confirming candle, which would mean that tomorrow's activity would be a large red candle with a lower low and a lower high. And we certainly don't have that as of yet today. But it wouldn't surprise me if we saw a little bit of sideways action or possibly even lower action in gold. It's all going to be dependent on news as it comes out. And right now, they're talking about a peaceful resolution, a diplomatic resolution to the crisis between the United States and North Korea. And should that evolve into something realistic and tangible, we would see a lot of premium that went into gold last week based on that assumption come out. However, my sense is that it will be very difficult to come up with some sort of a diplomatic solution. Nonetheless, we are long gold, and we are long gold from well below this price point. On Friday, we did in fact raise our stops, and our stops are sitting just below $12.80. I believe that $12.80 is a pretty critical area, and it is our current area of support. We can see that by the resistance that was in the market as this market pushed up from these lows of $1,200 and kind of stalled at $12.80 here, then traded lower a little bit, traded up, but it then again closed below that before the real breakout came above that. This, of course, being a daily chart. The actual position that we have on at roughly $12.70 per ounce, and we've now raised our stops effectively to $12.78. So even if this price point by chance does not hold, it will take us out, but it will take us out with a small profit. We are not risking a loss on this trade. Based upon the environment that we're looking at and the technical indicators as they sit, this level of $12.80 roughly should hold, and that's why we have it a little bit under at around $12.78. And so traders, all I've done here is taken our daily chart, converted it to a weekly chart so we can take a look at the various levels and where this particular number, where this price point of $12.80 comes in. It is a fib retracement of 61.8%, and the retracement itself is a rather long retracement because it begins with last year's highs at $13.80 down to the low achieved at the beginning of 2017, at the conclusion of 2016, when gold prices reached a low of just around $11.20. That being said, we've got our various levels here, our 23.5, our 32, 38.2, as well as our 68. And so I feel that this is a pretty important level for the marketplace to hold. And the question that I ask myself along with other traders is, are we going to witness a triple top in the market, or will the third time be the charm? My effective belief is that the third time will be the charm. Now, we might have a scenario in which the market comes out, stops us out, and trades a little bit lower, but I think it will find footing before the 38% retracement level, if that's the case. But I would think that what we will see is the market trading sideways for a little while and then pop up. I absolutely believe we will take out 1300. And as you know, my current current target rests between 1317 and 1320. Therefore, my recommendation is to maintain your current long position and to maintain your current stop. And traders, we certainly had outside markets influencing the precious metals markets today, with the dollar gaining some value, almost 0.4%. We can see that on this weekly chart today, only being Monday, but it allows us to put in a longer fib retracement on there. We have broken through quite some time ago what I considered to be a critical level, which was this 94 on the dollar index. Once we broke through there, I've been calling for the dollar index to go to roughly 92. We've come close roughly 3 weeks ago, or 2 weeks ago, excuse me, but we have not really tested this area. But the one thing that we can see is we do have some price points that are significant in that we could see the dollar decline further and then find some sort of support at the 92 level. If not, we could go into a technical free fall because there really is no technical area of support until around 88.5 on the dollar index should the dollar fall below this particular price point. This is the 38% retracement level, and that would take us to the 61.8% retracement level. And then lastly, a very, very resilient U.S. equities markets, with the Dow gaining about 0.6%, closing up 135 points at 21,993. Composite index, NASDAQ composite, outperformed pretty much all of the other markets in terms of equity indexes, closing up 1.33%, 83-point gain at 63.39, and the Standard & Poor's gaining about a full percentage point at 24.65. Traders, while there's absolutely no doubt that we have had some moderate selling in the market today, we did lose about 0.5% in terms of the price of gold. After witnessing this market trade so dynamically higher last week, and that is evident by this candle right here, this long green candle on our weekly candlestick chart, my sense is that on a technical basis, we should be able to hold the 1280 area. I would expect sideways to slightly lower trading activity and then a spike to break above 1300. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.